Welcome to Talk Tickers, where we break down the earnings calls that matter. Today, we're digging into First Solar's Q3 2025 results. And this was a big one. The stock popped over 5% after hours, so let's get into exactly why. Okay, so let's dive right in. The headline number here? A really strong $4.24 in GAAP earnings per share. I mean, First Solar really came out swinging this quarter. So what drove that beat? Well, it was all about strong performance on the top line. Take a look at this. Revenue hit $1.6 billion, which, as you can see, sailed right past the $1.56 billion analysts were expecting. And you know what fueled that? A record 5.3 gigawatts in modules sold. Just a massive quarter for sales. But the numbers are only half the story. The real story here, the one that everyone's talking about, is this huge strategic shift management is making. They are going all in, doubling down on American manufacturing. And this is happening at a time when, let's be honest, global supply chains are, well, they're a mess. And look, this quote from the CEO, Mark Widmar, it really just nails their entire strategy. It's all about providing certainty. Certainty on price, certainty on timing. I mean, in today's super volatile and unpredictable trade environment, that's like gold. And this isn't just talk, right? This is their plan in action, and it's seriously impressive. They just fired up their 5th U.S. plant. They're ramping up a brand new facility in Louisiana, and get this, they just announced another huge 3.7 gigawatt finishing facility for late 2026. We are talking about a massive, massive expansion right here in the U.S. So you might be wondering, how are they paying for all this? Well, they are funding this whole thing from an incredibly strong balance sheet. They ended the quarter with $1.5 billion in net cash. I mean, that's a serious war chest, giving them all the firepower they need to grow, but to do it smartly. Okay, so it wasn't all sunshine and roses. There was a pretty big storm cloud this quarter. Let's talk about the biggest headwind they faced, a huge contract cancellation that really tested their famously strong order book. So here's the deal. Affiliates of BP walked away from contracts for a whopping 6.6 gigawatts. Now, that sounds huge, right? And it is. But what's really important here is putting that number in perspective. As you can see, that loss is cushioned by a still massive 54.5 gigawatt backlog. So while it's a hit, it's not a knockout blow by any means. And you better believe First Solar is not just letting this go. Oh no. They're taking this to court. They filed a lawsuit looking for over $300 million in damages, basically saying BP didn't hold up their end of the bargain on payments. They also pointed out a broader trend, that some of these big European energy companies seem to be backing away from renewables. So, this whole situation creates the million-dollar question for investors, doesn't it? Can First Solar actually spin this negative into a positive? Is it possible they can resell all that capacity for an even better price? And when they were asked about this on the call, management's answer was basically one word: patience. They said they're going to be very patient. Why? Because they think they can get a better price, maybe somewhere in the mid 36 cent per watt range. They're waiting for some key policy decisions like the Section 232 tariffs to drop. I mean, if those tariffs hit imported panels, suddenly US-made panels become a whole lot more valuable. All right, so despite that really strong quarter we talked about, these new headwinds, the BP situation and some other issues, forced management to, well, tighten the reins on their full-year forecast. So here's the updated guidance. You can see they tightened up the range for both sales and earnings per share. Now, the key thing to notice here is that they shaved a bit off the high end of the range. And that trim? It's a direct result of the new reality they're facing with the BP cancellation and a few other supply chain hiccups. So let's break down that $1.50 reduction at the top of the EPS range. It really boils down to 3 things. About 60 cents came from some supply issues with their glass suppliers. Another 60 cents came from the cost of having production capacity sit idle because of the BP termination. And the last 30 cents was a mix of other smaller odds and ends. Okay, so after all that, the beat, the drama with BP, the guidance cut, what does it all mean for the next quarter? Well, here's our take. We're stamping this with an outperform rating. And here's why. We think the market is doing exactly the right thing here. It's looking right past this short-term guidance tweak and focusing on what really matters, the massive long-term value of their big bet on U.S. manufacturing. So, here's the trade idea.
Our whole thesis is that this BP contract termination is actually a blessing in disguise. It frees up a huge chunk of super high demand, domestically made capacity. The catalyst? We think upcoming trade policy decisions, especially those Section 232 tariffs, are going to give them some serious pricing power. So the trade itself, we're looking at long FSLR calls heading into Q4. We're betting that management comes out and announces they've rebooked a big piece of that lost volume at premium prices, setting them up for a huge guidance raise for 2026.
And that's our take on First Solar. As always, this is not financial advice.